In this video, I'm going to talk you through the 7 key steps to improving your clarity on your business's cash flow. So step number 1. So it's so important for you to understand cash flow in your business, and you're not going to be able to do that without accurate, real-time accounting information. So the first step you should take is to get an online accounting system. The one we'd recommend is Xero with an X, and then you need some kind of receipt management tool like Dext. And what that will do is allow you to set up an account to that email address and forward all of your receipts automatically to Dext. Snap pictures of those receipts with your phone. The receipts will come into your accounting system. The bank statement lines have come in as well, and you're effectively just matching those off. So it's absolutely critical that you're not trying to run your business from a spreadsheet, or like I heard recently, just from looking at the bank statement. You absolutely need online accounting to get clarity over cash flows in your business. And step number 2 in increasing the clarity around the cash flow in your business is regular weekly bookkeeping. There are so many people that I see that have the right online accounting tools. They've set them up, they've bought them, but they're either doing their bookkeeping themselves, and don't take this the wrong way, you are not qualified to do your own bookkeeping, or they're not doing it on a regular basis. So the whole point of an online accounting system is that you have regular, up-to-date, accurate information. So that means weekly bookkeeping by an accountant on the same day every single week. So you know if it's done on a Wednesday, you answer a few questions and you can come in on Wednesday night and have a look at exactly what's come in and out of your business that week with complete confidence in the accuracy of the data. Step number 3 is understanding your business's margins. So you've got your online accounting set up, you're doing your weekly bookkeeping, everything's up to date. Now, if you run what we call a profit and loss report in that system, it will tell you what your income was, what your direct cost of sales were, and what we call your gross margin, what your fixed costs are, and what we call your net margin. And you're therefore then able to speak to your accountant and understand, well, what should my gross margin be? What should I be spending for every 100 units that comes in? How much should I be spending on direct cost of sales like staff? How much is a good budget for fixed costs and overheads? And then you can go one step further and actually compare your numbers to other businesses in your industry, which is what we call benchmarking. And this will really allow you to keep a good level of financial control over your cash flow and really limit the risk of overspending. Step number 4 in increasing and getting clarity over your business's cash flow is having savings goals. And that simply really means just understanding how much cash you should save in your business, depending on the economic climate, depending on what your level of fixed costs are, depending on what your tax bills are building up to be, depending upon what your objectives are for investment in the future. But just allocating cash flow savings goals and working towards them every single week. Step number 5 in increasing your cash flow in your business is doing a regular overheads review. I can't tell you the number of clients that come on board as new clients at Grow Factor, and we ask them, when was the last time you did an overheads review? And their response is, what is an overheads review? So I would recommend at least every month or every quarter, you run a profit and loss report in your accounting system. You go through each individual cost line and you make sure you allocate those costs into 4 buckets. So one is, yep, I'm happy with that cost. I'm getting a good return on investment. I will keep that cost. 2 is, let me see if I can get that same service from a different supplier at a better rate. 3 is, let's pause that service for now because maybe we're not sending emails through our CRM and we're having to tidy up our email list. So why are we paying for a CRM when we're not actually emailing anyone? And number 4 is, oh, I signed up for that streaming service or that software subscription and I haven't actually used it for the last year. So why am I paying for it? If you go through that every single quarter, you'll just make sure that there aren't things coming out of your business in terms of outgoing cash flows that shouldn't be there. So you're just maximizing the profitability and maximizing the cash flow in your business. Step number 6 in maximizing your cash flow is having cash pots. So there was a whole book written on this. It's called Profit First, but just to summarize that, it means simply have multiple bank accounts. And so with modern online banks, it's as simple as having one main business bank account and having linked accounts to that. So in the main business bank account, you want to save somewhere between 3 and 12 months worth of your fixed costs. And that just allows you to have, some freedom and some comfort and some relaxation that actually, if you generated no sales for the next, say, 6 months, all of your outgoing costs, paying you, paying your staff, paying all your software, paying your rent is covered. And it gives you time to then work out a new strategy. And I've heard stories where, businesses have literally had certain things change in their model or market changes and all of their customers disappeared overnight. So in the first account, keep 3 to 12 months worth of your fixed outgoing costs. In the second account, every single month, calculate your taxes and move money from account 1 into account 2. So you've got your corporate tax, you've got your sales tax squirreled away in that second bank account. And number 3 is anything above. So when the first account, if you imagine it like a glass, gets full of water and you've got your 6 months worth of fixed costs, you've got your money in your tax account, anything above that gets dripped into a third account, which we call growth. And when there's money in your growth account, you're then able to hire new staff, go on, Tony Robbins Business Mastery, pay yourself that extra bonus dividend to take that dream holiday. But it's a really simple way of understanding when you can spend on those extra things and when you should pull back a little bit on your expenditure. And the final point number 7 in our cash flow improvement steps for your business is forecasting. So you've got online accounting, you've got weekly bookkeeping, you've got separate bank accounts. You're on top of your cash flow. You know exactly what's coming in and what's going out. Now, the next step is to try to predict the future. And the reason we do this is so that we can make decisions around where we should spend our cash moving forward. So if we're predicting that we're going to gain 1 client a week, you have a service business, you could say, well, in 3 months, we'll have enough cash flow to hire a new member of staff. In 6 months, we'll have enough cash flow to move offices. In 1 month, if this ad works really, really well and it's generating cash flow in the way that we think it is, we can increase ad spend to this. So having a live cash flow forecast is really, really important. You can either do that in a Google Sheet, and that allows you to kind of play around a little bit more easily. However, your opening cash position can easily become inaccurate in a spreadsheet. It's very, very high risk. What I would really recommend is adding on a tool such as Float, linking that to Xero, which is kept up to date every week as your accounting system. And that will allow you to predict future cash flows and then sit either with yourself if you're a one man or woman band, or with your team, and make strategic decisions around your future planned cash flow. So just to recap, we've talked through 7 ways that you can either increase clarity around cash flow and therefore make better decisions to improve cash flow, or physically improve cash flow, like doing an overheads review. I really hope that this video was helpful, guys. I'm going to be bringing an episode or a new episode of what I'm calling business class every single week. If you enjoyed it, please like, please subscribe, please write in the comments. I will answer any of your questions personally. If you want me to clarify or you want me to cover something different in the future, hit me up in the comments. Otherwise, I will see you next week for another episode of Business Class.